PCard control audits, or what some refer to as PCard process audits, or a performance audit, or a compliance audit, are something our guest, PCard expert Lynn Larson, is well familiar with. We were chatting recently, and she mentioned that she, through her company, Recharged Education, just finished a PCard control audit for a larger mid-sized company, and some of the things she found absolutely astounded her, although she would never use the word astounded, I'm sure. Make sure you stick around until the end when she says some of these findings control weaknesses that you could very well have in your operation and not even realize it. So, Lynn, perhaps you could start off by leveling the proverbial playing field and explain what is a PCard control audit.
Well, it's a lot like it sounds, Mary. It's looking at the internal controls established for a card program, and first identifying whether an organization is following what they say they're doing. They might say they do X, and are they really doing X?
Yep.
As well as just verifying the effectiveness of the controls. So you
Okay.
have to test the controls. You want to make sure that they're being followed and that they're working. In a
Okay.
nutshell.
Yeah, that's good. A good one. All right. So, do you think that most people even realize they should be auditing controls, or do you think it's something that gets ignored?
Well, I think a lot of organizations overlook it. So much emphasis is put on transaction auditing,
Mhm.
which of course is important. But you have the other side to that, where an organization might go about and establish what they think is a really robust control
Mhm.
environment. But unless you actually do, like these process audits, compliance audits, whatever term you want to use to test the effectiveness, you might have controls that aren't actually working as
Mm.
intended. So that of course can open the door to fraud and
Mhm.
just leave yourself, if not fraud, but just open to a lot of problems, a lot of discrepancies. So you really have to pay attention to the whole piece. Do your transaction auditing, but also look at your controls and test them, verify them, not just what the card holders and managers are doing, but as well as what the P card program manager is doing, and all the others that support the program.
I know, Lynn, like one of the things that I say when I talk about internal controls in general, and it sounds like it would be the same thing with P cards, although you all certainly shed some light on this, is that when you have a weak internal control, the folks who know about it best and therefore are best placed to take advantage of it if they should desire to do so are your employees.
Oh, absolutely. I think the closer you are to something, you know more ways around it. So
Right.
that's certainly true. And I think too, when organizations, let me go back a little bit. When
Mhm.
they establish controls, and then if they do these audits, and they find problems, they find gaps or issues that should be closed, the last part of that is fix it. Do
Right.
something about it. Well, you're laughing, but maybe we're getting ahead of ourselves. I was going to save these things for the end,
Right.
but really, they find things, and then it's maybe a lack of assigning responsibility to someone to close the gap. Maybe it's just lack of follow up. Whatever the case may be, once you've discovered an issue, you need to, close it, fix it.
Fix it now.
Exactly.
Also, don't add it to your to-do list that maybe it'll get done 3 months, 6 months from now.
Exactly.
All right. So you convinced me, Lynn. We should be doing this. Where do we start?
Well, I think, I mean, this is something I do, but it's either an external person like myself to come in or your internal auditing group. I wouldn't put it in the hands of a program, manager or administrator, because they should be looked at too as part of the audit. So, number one, get it on a schedule, get it on a rotation. I say annually, but even every other year can do the job as well. It just depends on really how many findings you have and whether you fix them or not. But to get things going, an auditor or an external person should be looking at the organization's most recent PCard risk assessment or risk analysis that was completed, because that is the document that would be documenting the controls that are established. And I guess I should say that's another piece where organizations often overlook completing one or keeping one up to date. But let's assume that you've got a current risk analysis. then the auditor could start going through that saying, oh, okay, you say this, well, let's, dig deeper and see if this really pans out and how well it's working. So you've got that. I alluded to the past audit results. That would be another thing. Of course, a year ago, if you found XYZ wrong with the program, make that a good part or a starting point for your current audit. Did it get fixed? And how well is the fix working? So that's the other piece. And then even, just take your PCard program policies and procedures, take that manual and start going through to verify that all the things and all the pieces that supposedly are in place truly are. So those three pieces would be a good starting point.
So one of the things on the AP side I like to recommend, don't know if this would work on PCards, but you'll tell me, is that when you have a new hire, sometimes that's a good person to have go through your controls to make sure you're doing everything you say you're doing.
Well, actually, I don't know, Mary. I haven't even tried that approach. So thank you for the tip. That would be good, though. I mean, it can be better, obviously. So on that note, to have somebody less familiar or unfamiliar with the
Yeah.
program for that matter. And that's why, when I say have an internal or external person doing it, a lot of organizations have said to me, we want an external person because you don't know the employees,
Right.
names don't mean anything to you. So, you don't have a preconceived notion going into it or some kind of bias. And, you can really just take a clean look is what I'll say. But, that's not to say internal auditors can't do the job, but, many just say we want an external person.
Okay.
New hire. Okay. That's a good tip too.
Okay. Before we get to some of the really interesting things that Lynn has encountered, we'd like to remind you that we tackle the big accounts payable and payment issues on Tuesdays and Thursdays, and on Saturdays, well, sometimes we just have a little Wordle fun. So check out our channel for a full range of videos to help you expand your accounts payable and payment knowledge. And by the way, Lynn has done a number of these episodes with us, so you'll be in for a treat with her. So Lynn, for the part that I'm always interested in, what are some of these odd things that you've found when you've done a PCard process or control audit for some of your clients?
Well, and I mentioned to you, Mary, in advance even that sometimes transactions are
Yes.
the most bizarre thing, and we could
Yes.
talk about those too if there's time. But again, getting back to the process piece of things, the separation of duties issue tends to be a big deal, I think, because especially when you have a small staff, it is a little more challenging to accomplish that. But organizations often fail to separate key duties, especially related to accounting aspects. So here's one example. There was an organization where the PCard program manager would download a file of reconciled transactions from the issuer, and that came in a text file format. And he might be looking at it and noticing some coding errors when it comes to accounting codes or budget codes. And right within that text file, he would correct the codes and then he would turn around and upload it into the finance system. So, I'm sure some of you that are listening to this are just cringing because one, you really don't want to be editing a text file. I mean, that just leaves no audit trail unless someone sat side by side between what had come from the issuer or been in the issuer system to what's in the finance system. But also, one person shouldn't be downloading that file, have the ability to change it, upload it into the finance system, nor should that person who is dealing with the file shouldn't even have access, at least, not an editable access to the finance system. So that's one thing. And so I've had organizations say, well, we have such a small staff, but I'm like, you've got at least two people. Someone can download that file and then it can be parked in a shared drive and someone else can be uploading it and doing the second half of the process. So that's a big deal. And then just to go back to transactions for a minute, I had one organization who hired me, Recharged Education, to do both a transaction audit as well as, more of these process audits and looking at their policies and procedures. Well, I got into the transactions first of all, and I
That
saw
was fun.
yeah. The thing that was fun were just tons of transactions with a local deli. And that's not typically something you would see on a P card, even if it had been a whole travel card program.
Right.
I wouldn't have expected to see so many local transactions. And so then I asked the organization, I said, tell me the story, or what's going on with all these deli, food transactions. Well, unfortunately, it was mostly conducted or carried out by someone at a high director level.
Mm.
And the organization's response is, well, he loves food. He just
Me too.
enjoys. And apparently they were all business luncheons, and he was taking out local leaders. I don't know. I just said, well, that is something to look at, because, as I dug deeper and got into their policies and procedures, I realized they don't say one way or another if a P card can be used in this manner.
Right.
And so that is a key thing that organizations overlook. Their policies and procedures might be lacking in terms of what they say is prohibited or allowed, or really drawing the line. And that actually then that carries me into yet another story.
Yeah.
I found one organization. I was all set to get started, and I said, okay, can you provide your policies and procedures? And we mentioned that's a good starting point.
Right.
And what they handed me was, well, not handed, it was electronic, but what they gave me was a 1-page document. I said,
Great.
this is it? Yeah. And I looked at that, and it had a few key points, don't use the card, for personal purchases. And
Yeah.
it had a few things in there, but 1 page. I would say most manuals, if they are robust, are at least 15 pages,
Yeah.
because you've got some procedures in there too. I'm not saying it's all policy, but 1 page is not enough.
1 page is not enough.
And the more I learned, then it was, oh, well, and we share cards. Like if so-and-so needs to go to the store, they'll go get their manager's card. And I'm like, don't tell me that. But then again, I looked at their 1 page, and it said nothing about card sharing. It said no personal purchases. And so I'm not saying fraud was happening, but this is a control problem. This was something I said you shouldn't do. You do want to hold each card holder accountable.
If there's a shared card and there's an inappropriate purchase, you have no idea who made it.
Right. I know. I mean, there's so many things wrong with that. So that was something. What else can I tell you, Mary? Boy, I have to think about this. I have a couple notes here. Let me look. Oh, let me share another one related to the accounting aspect. There was one organization who told me that if they had any transactions that were awaiting a vendor credit, something the vendor did was wrong, or maybe someone returned something, they just short paid the bill. And so, you are obligated to pay your issuer in full each month, and then deal with whether it be a formal dispute that you have already initiated with your issuer, or someone is just working with the vendor to get a credit. You need to pay that bill in full, and then work it out from there. I mean, then when you truly get a credit, you get a credit. That's fine. And so this had been going on for months.
I bet you a lot of people do that.
Oh, I don't know. I was surprised at this one, because eventually they reached a point where the issuer said, you owe X. And I'm trying to remember, it was like $7,000, I think. You owe X amount. And they were like, well, what do you mean? And it was just a mess. It was
because
a mess
the
from an
credits
accounting
didn't come
aspect.
through, probably.
Or they did, and just everything got wonky in the end. I mean, you just couldn't, you need, well, as you know, from just accounts payable in general, do that balancing, do that, reconciliation.
Well, I'm a little surprised they had that many credits.
I don't know, maybe
nature of the business.
It could be. Yeah. Just something. I don't comment on who they were, but so it's things like that. So, you get separation of duties. It's, policies and procedures that are lacking. It's just things, so at the beginning I was alluding to robust policies, or controls rather, and, organizations not testing them. I find more there are just lacking controls.
Okay.
Not so much they're not doing what they say. It's more like they are doing what they say, but what they say isn't
They
enough.
don't say too much.
Exactly. So just so many, things you could just dive into. But, when I get into an organization, I mean, I really try to look at a card program from 9 different areas. I'm looking at accounting aspects. I'm looking at the program management aspect. That would be another thing, to be honest, when I say lacking. You've got your standard policies and procedures that card holders, managers are supposed to be following. But then there should be, something that that program administrator or manager of the program is referring to, and that's documenting when they do certain things, and checklists and tasks, and all of the follow through that they should be doing. Many organizations don't have that. They don't have what that person's job entails. Maybe they have a job description, but they don't have things written out. So it's just another way where I'm like, okay, do you do X? I don't know. Yeah, well, we do, but it's not written down anywhere. So
Yeah. And then that means that when somebody leaves, when the new person comes, they may not know that they're supposed to be doing X
well, exactly,
because there's no
exactly.
documentation of it.
So
Well,
just a lot of things lacking. But,
yeah.
to go back for a minute, if you want to be really making sure an organization is doing what they say, that piece of it, I
Mhm.
mean, then it's looking at things like the training aspect. Are they really training card holders before they issue the card to those employees? Are they doing account closures on a timely basis?
Right.
Again,
Right.
according to their rules. So
Mhm.
it's things like that. But in so many cases, you don't know what you're missing unless someone comes in and
No.
tells you what you're missing.
No. And then people, I'm sure, are horrified when they see what went on.
Well, maybe, but again, do they take action? I mean, now I'm still going back to that.
Yeah.
I've done projects with organizations like this where,
Right.
I try to follow up with them a few months later, and oh, we just haven't gotten to that yet.
Right.
I'm
Great.
like, well,
And the money's
all right.
going out the door.
Well, who knows?
Yeah.
But
Yep.
I try.
So speaking of controls, and Lynn alluded to this, one of the biggest headaches for more than a few organizations is employees who put personal purchases on company cards. Lynn has a lot of insights on that issue, which she shared with us in a recent video. You can watch it right now using a link that will appear momentarily on your YouTube screen and is in the show notes below. We'll also include some links to other broadcasts featuring Lynn, and of course, a link to the Recharged Education website. As always, we appreciate your thumbs up, your comments, your shares, and your subscribes. Good luck.